Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Bell and I'm your host Nickey Mirchandani. Well, Indian stocks are set for a cautious start ahead of US Fed rate decision amidst mixed global cues at this point of time. Nifty at this point of time suggests a slightly negative start for Nifty 50 index performance. US stocks somewhat ended upbeat on good set of numbers coming in, mainly led by tech-based stocks. Asian stocks at this point of time are trading mixed ahead of the US federal rate interest rate decision on Wednesday, where Fed is widely expected to raise benchmark fund rates by 25 basis points to target the range of around 5.25% to 5.5%, the highest level since Jan 2001. Back home, the highest delivery percentage is seen in Info Edge, Dabur India, Godrej Consumer, along with Apollo Hospitals and HUL. FIIs, if you look at that data, they've bought in shares to an extent of 1,088 crore, and DIIs have sold shares worth around 333 odd crore. Well, the earnings that we like to watch out for: Axis Bank, Bajaj Finance, Dr. Reddy's, Tech Mahindra, Shree Cement, and Tata Consumer Products, BPCL, Cipla, Punjab National Bank, REC, Colgate Palmolive, amongst others. These are going to be the companies which are essentially going to be reporting in their June quarterly numbers. But in terms of FNOQs, 46 stocks have seen a long build-up, and this includes the like of ACC, Motherson International, along with ONGC, Aditya Birla Fashion, and NTPC. 50 stocks have seen long unwinding. This includes the like of Intellect Design, Rena, Canara Bank, PVR Inoc, Emphasis, and Punjab National Bank. Almost 59 of them have seen short covering, and this includes the like of Gujarat Gas, Muthoot Finance, Indraprastha Gas, Alchem Lab, and JK Cement. Almost 30 of them have seen short build-ups, and this includes the like of Asian Paints, Reliance Industry, IRCTC, Aditya Birla Capital, and REC. The stocks that are currently under FNO ban, well, the NSE has added Sun TV Network to its FNO ban list for July 26, while it has retained Canara Bank, Delta Corp, India Bull Housing Finance, and RBL Bank. Let us get going and discuss some stocks and strategies with Raja Venkatraman, co-founder of Neotrader. Good morning there, Raja. I'm going to start off by asking you about your assessment for the markets, which seems to be a little range-bound in the last two consecutive sessions. Fed rate decision, which is expected to come through today. In light of that setup, how are you looking at the markets? What is the strategy that you suggest to our viewers, both Nifty and Bank Nifty? Good morning.
Good morning, Nickey. The exact way what we need to do is we need to hold on to our bearish bias, which seems to be stepping in as market seems to hesitate at higher levels. What I'm seeing right now is that market, yes, definitely has got a overhang, and the higher levels are attracting some selling pressure, but the tailwind seems to be some positive result flows which are emerging from the strong set of Q1 numbers which are coming in. And from even if you take the banking space, or even if you take the pharma space, or even the other services, they are all coming out with some decent set of numbers. So if you are considering that yes, the momentum is stretched and we should all be exiting our positions right now, the answer is no. Now, drilling down to Nifty, yes, Nifty has had a fantastic move over the last few weeks, and yes, that's the reason why it's taking a pause right now. Now, at higher levels, when you take a look at the option data, that's what sets the pace for our markets. The option data suggests that the PCR of Nifty as well as Bank Nifty are clearly stating that there is heavy call writing happening at higher levels. So if Nifty has to really show some further poise, it needs to move above 19,800. So at the start of today's session, yes, there is a cautious note, like you rightly said, for the Fed Bank rate hike or the decision. So in that direction. But what we need to consider is that the markets are being tested at the moment. And if that 19,800 is once again surpassed with confidence, we'll see further upside. and it could be a good play towards the expiry, which is coming up tomorrow. Now, on the contrary, what I find is Bank Nifty has not so much wilted in comparison to Nifty, and I find that at lower levels there is continuous buying emerging. And if 46,000 is the resistance zone on the Bank Nifty, so if 46,000 were to give away, then you could see a move towards 46,500. Now, the overall indices continue to remain in the positive trajectory. There is no disturbance as of now as far as the momentum is concerned. So I will remain on the long side for the next few days.
All right, that's the word coming in for Nifty. How about Bank Nifty? What's the strategy and the levels, please?
Yeah, so when you take a look at Bank Nifty is having a 1,000-point move. So lower levels towards 46,500, 46,600 continues to be a good support region. And 46,000 is witnessing a lot of call writing at the moment. So that could become an important zone to watch out for. So once 46,000 is exceeded on Bank Nifty, we can see move towards 46,350 to 46,500.
All right. Raj, I also want to understand one recommendation, which is going to be a profitable idea, and also what can viewers do now with Tata Motors and Tata Motors DVR before I give in to the news of what's playing out for these two companies?
So the Tata Motors has given a stellar run, and yes, there are the news of the DVR floating in, the exchange of DVR floating in. But then what I see is that these kind of news flows, they just prove to be a momentary dip. And I recall coming on your show few weeks ago, and where Tata Motors had given a fantastic breakout above 500, 520 was the level where there was quite a bit of resistance there. And then from there on, it has gone on to 640 now. So I believe that this stock is a continuous addition on dips. So any dips towards the region of around 550 to 570 would be a good region to buy into, because Tata Motors is a very, very strong candidate on the buy side. So any opportunity you get, you should look at Tata Motors as a buying opportunity. It's a good investment bet. It's a good trading bet. It's a very, very positive candidate.
All right. So buy on dips is a strategy coming in for Tata Motors. But we are going to be first talking about Tata Motors DVR, because that's going to be delisted. The board has approved conversion of category ordinary shares to just ordinary shares, which just implies that DVRs will be converted into the ordinary share. This is the ratio of 7 ordinary shares for every 10 DVR that the shareholders have been holding. And after the conversion, it will be delisted from the exchanges. So overall, if you look at the performance per se of Tata Motors, the numbers have also been encouraging. Besides the development of the DVR delisting, which is also seen in positive light given its EPS accretive, at least for the DVR shareholders part. But let's actually look in the numbers first. Net profitability is at 3,089 odd crore as compared to a loss of around 4,987 crore. Now it swung back in black, and the estimates were, consensus was to the like of around 2,656 crore. So there is a beat which is coming on the bottom line performance, essentially, which is driven by the JLR numbers. Revenue is up by 42% at 1.2 lakh crore as compared to an expectation of 1.1 lakh crore, more or less in line with Sync. EBITDA is coming at 13,218 crore as compared to a number of 3,180 odd crore in the corresponding quarter of the previous year. Now, the expectation was to a number of around 12,000 odd crores, so there is a beat coming in even on the EBITDA performance of the company. If you talk about just, what brokerages have to say, Morgan Stanley essentially has maintained that overweight rating, target price of 711. It says that the JLR business has driven the beat coming in for the earnings. And, the deleveraging should drive in FY24, essentially the JLR deleveraging. And the India EV ramp-up is expected to be the key theme. And the approved, the company has approved simplification of capital structure by cancelling in DVR. Arrangements will result in a 4.2% reduction in the outstanding shares. Now, that's the word coming in overall for the DVR. Expected bump up to come in for Tata Motors DVR. Need to see how Tata Motors react. The earnings have been more or less better than what the street was estimating. Let's talk about L&T. Strong inflow, stellar execution, and guidance beaten Q1. That's how you describe L&T. The net profitability is up by 46%. The number is 2,493 crore. Street was working with an estimate of 2,100 crore. Revenue is up by 33%. Number was to an extent of 47,882 crore. The street was working with an estimate of 40,552 crore. Buyback has also been approved for L&T. That's again a positive coming in on that one. Let's address the markets open. We are looking at a positive start coming in for the markets. 0.25% of gains coming in, 19,750, near about to that level, but a little bit away from that level. Bank Nifty, another one that you need to keep an eye out on. That's essentially just to see how is that faring out. It's 0.1% of gain coming in for Bank Nifty index. Let's look at mid cap and the small cap index for you. Mid cap index is doing well, in line with what the larger counterpart is doing. 0.25% of gains coming in on that one. Small cap too is doing well. 0.4% of gain coming in for the small cap. Seems to be outperforming the larger counterparts, which has been the trend that has been playing out thus far. IT, it's holding up. 0.3% of gains coming in for the IT index overall. And if you look at the FMCG basket, that too seems to be doing well in trade. Almost more than 0.25% of gain coming in for that one as well. And if you look at the pharma index, the pharma basket, it's holding up with gains of around 0.1% out there. Auto index seems to be doing extremely well. Gains to an extent of 0.75% out there. Metal index seems to be shining bright. PSU banks are doing exceptionally well. Realty index with gains of 0.3% out there, also pretty much following the gains right now. Let's look at the top gainers and the top losers that we have. Advance and declines right now. The market breadth seems to be widely favored in the favor of advances. 41 advances, 9 declines. Let's look at the top gainers and the top losers. Tata Motors, L&T, Power Grid, along with the other gainers that we have, UPL, Hero MotoCorp and Infosys. These are some of the top gainers that we have. GSW Steel, Tata Consumer Products and Trasim are some of the other gainers that we have on the list right now. Let's talk about top losers. Well, we have Adani Enterprises, which was doing extremely well in previous session. It has succumbed to selling pressure on early deals. Apollo Hospital, Asian Paints are some of the other companies. ICICI Bank, M&M, Hindalco. These are some of the other losers that we have on the list. But a buyback plan coming in for L&T, that's the first 3,000 rupees per share, and it's also a premium coming in. What Morgan Stanley has to say about L&T, it's raised the target price and says that the execution essentially is coming from the core business, which is managed, managed to surprise. And the management has reiterated the core margin outlook for the entire financial year and has guided for improvement in the second half of this financial year. To remember the fact, L&T is going to be buying back as much as 10,000 odd crore worth of shares. You can see that momentum coming in for L&T, right? 4%, nearly 3.5% uptick. This would be done at a max price of 3,000 and the buyback is at a 17% premium as compared to the previous market price. Talk about Piramal Enterprises, that's again the one that you need to keep on your list. It's got to be considering, the board is going to be meeting in to consider share buyback on July 28th. So that's another one that is also moving up with gains to an extent of 4%. Delta Corp, the online gaming company, which was in focus some time back because of the GST announcement. Reported numbers, net profit, you're seeing an uptick coming on that one, 18.9% net profitability. Revenue is up by 9%. EBITDA is up by 9.5%. And margins, they've, more or less remained flattish around that 35% odd level. For SBI Life Insurance, that's a little bit of weak quarter, but it comes on a strong base. A bit of concerns around the Q1 con call, and they've been around. They expect APE growth. However, management expects APE growth to bounce back in the second half, helped by the weak base, and there is an improved sentiment also sees the brokerages around see deep value and strong track record, which make it a compelling investment case. That's the word coming for SBI Life. A bit of negative bias coming in for that one. 0.75% of losses coming in on that one. But what you really need to talk about is Tata Motors and Tata Motors DVR. Look at the gains coming in for Tata Motors DVR. 14.4% gains coming in for Tata Motors DVR. Of course, the deal is in the favor of the DVR shareholders. And look at Tata Motors too, shining bright in trade with gains to an extent of 2.5%. L&T has been holding up after the results. Clearly good set of numbers. Raja, come in on this one. Buy on dips, no dips coming in for Tata Motors clearly. And Tata Motors DVR shareholders also. They're in sweet spot right now. How would you suggest, what trade would you suggest for Tata Motors DVR right now? Would you still suggest entering into Tata Motors at these levels?
Yeah, Tata Motors DVR also, if you take a look at the move, so there is some bit of profit booking that's going to emerge there. So now it's also going to get delisted. So the better ploy would be to directly go into Tata Motors. And like we discussed before the opening bell, I was very positive on Tata Motors, and I continue to believe that it is a very good opportunity for traders as well as for investors to invest, because if you're going to wait for some dip to occur in Tata Motor, then you'll be waiting for a very long time. So keep buying at every level, and the levels to buy, if you need to buy it on dips, would be in the region of around 580 to 570, and that would be a good zone, because that's where it spent quite a bit of time consolidating. So I would look as a dip buy opportunity at those levels, but then even at current juncture, it's still worth a buy.
All right, still worth a buy at the prevailing levels even after the uptick that you're seeing. What about L&T, and one profitable idea for our viewers out there, Raja?
Yeah, L&T is also come out with some decent set of numbers, and there are positive news flows also emerging regarding the buyback. And today you can see that L&T has got off to a good start. Market is off to a good start, largely because of strong movers in the Nifty doing well. So I think that today is going to be a positive day, like I discussed with you. So one should look at buying opportunities, look at stocks which have come out with decent numbers, and you can definitely look into those stocks for some good opportunities to make profit today.
All right, that's the word coming in. These are the bets that Raja has suggested. But Raja, thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure having you with us.
Thank you.
All right, let's navigate our discussion now to the new kid on the block, not listed but opens for subscription today. So we're going to be talking in for an IPO, which is Yatharth Hospital. And it opens for subscription on July 26th, closes on July 28th. Prices to an extent of, the price band rather, is to an extent of 285 to 300 per share. It has a component of both fresh issue as well as offer for sale. And perhaps the listing date could be 7th August. This is just, we're just working with some estimates out there. But Lekha Badlani, research analyst at MC Pro, joins us to take the discussion forward with regards to this IPO. Lekha, good morning there.
Good morning, Nickey. How are you?
All good. Thank you for asking. Yatharth Hospital, that's the one that we were talking about. I'd want to understand from you, how are you looking at this IPO? What is the rating that is coming from MC Pro? What are the key highlights, concerns? Take it away.
Nickey, so with regards to Yatharth Hospitals, it is primarily concentrated in the NCR region, and they recently acquired another hospital in Orchha, Madhya Pradesh. Have an in-house pharmacy shops, which account for around 30% of their revenues. The company has shown strong revenue and operating profit CAGR in the last 2 years, which is better than many of the industry players. Its operating margins and return ratios are also among the industry leading. However, we think there are a couple of concerns, like the ARPOB, that is average revenue per operating bed, of around 26,000. It remains one of the lowest, compared to listed industry players. In terms of specialty mix, around 31% of the revenues come from the relatively lower margin medicines business. Moreover, their bed occupancy at 45% is also pretty low when you compare to other, the industry average. Additionally, the company is also very highly leveraged. I mean, the debt to equity of around 1.4 times, it remains too high, and the cash profile is also quite weak. So, despite having industry-leading operating margins and return ratios, compared when we look at the peers and we compare relatively, the operating metrics, for example, the RPOP, the PR mix, and specialty mix, they don't look very impressive to us. So that's, and also, the high concentration in NCR region, which is already overcrowded with hospitals. So we think, the market is too saturated over there.
All right, Lekha, one quick question there, actually 30 seconds each on this one. What is the rating that MC Pro has given? Is it an avoid? Is it a subscribe? Or is it just a play on listing gains? And B, valuations as compared to peers, affordable or decently priced?
Okay, so, in terms of valuation, the offer is implying that the company is valued at around 21 times its EV/EBITDA for FY23, which is close to the industry average, and we think it leaves little room for re-rating in the near term. So, despite having good performance in the recent years, we think the business mode is lacking here, and investors could probably wait, until a more differentiated model emerges for the company. So we would advise for investors to wait, really.
All right, Lekha, that's the word coming in. A bit of leverage, concerns out there. You could wait it out, but if you want to go ahead and play it as a listing gain, well, that could be one of the case out there. But Lekha, thank you so much for taking out the time and speaking to us this morning. Now it's the time we need to navigate our conversation to broader macro issues along with the fundamentals of the market. And to take the discussion forward, we're being joined by Pankaj Pandey, Head Retail Research from ICICI Direct. Good morning, Pankaj. How are you doing?
Hi, good morning. Thanks for having me.
Pleasure is all ours. I'm going to start off by asking you about your assessment overall on the entire auto pack, especially the one for Tata Motors and Tata Motors DVR. How do you find the arrangement of simplifying the capital structure and delisting DVR? Sure, the deal seems to be in favor of the DVR shareholders, but how are you looking at it?
Well, yes, definitely this share swap deal is favorable for Tata Motors DVR holders because against a prevailing discount of 40%, what is offered as 30% discount. And I think largely that is sort of getting reflected in today's prices. But I think overall, when we sort of look at Tata Motors, I think numbers were quite robust overall, especially on the JLR front. I think JLR, we have seen quarter-on-quarter gross margin expansion of 260 bips despite flattish volumes. The margins actually, EBITDA margins have also improved 150 bips to about 16+%. Now, this is happening largely because the product mix is quite better. And I think even the order book is quite good. Good part is that the management had been sort of guiding for 7% plus EBIT margins for Tata Motors for JLR. And they are already sort of exceeding that guidance in this quarter. I think the only near-term or miss has happened largely on the domestic front. So we have seen, say, for example, in the CV business, their market share has gone down below 40%. Margin profile, which was in excess of 10%, has come in lower at by 60, 70 odd bips to about 9.4 odd percent. And largely because of some of the near-term challenges in terms of supply chain. And I think on the CV side also, since they are selling more EVs, so that has sort of led to impact on their margins on the EBITDA side. But I think these are near-term challenges. Structurally, we like the stock. Previous rating which we were carrying was a buy rating with a target price of 700. So I think all in all, auto as a overall play looks very good to us. And I think CV also, when you sort of look at domestically, when you look at compare with peers like, say, Ashok Leyland, the margin profile has been 10%. So I think it's a company-specific issue. And going forward, our sense is that margin profile domestically is going to be better. And I think whatever softness we might see or we are seeing in this current quarter, especially on the domestic side business, I think will not sort of persist. So we expect a pretty good set of numbers from Tata Motors going forward. So I think all in all, this is one stock which has been outperformer, and our sense is that we would look to sort of revise our targets beyond 700 as well.
So within the basket, do you like Tata Motors the most? It's been an outperformer. You expect it to continue to be an outperformer, or you think there are better off companies with more decent valuation in the entire space?
So I think within the tier one names, what we like the most is Tata Motors plus Maruti. I think Maruti also has been sort of hasn't done much in terms of price performance, but our sense is that with the rural segment sort of looking to pick up, and I think with the kind of launches what they've done on the UV side, I think that is another stock which should do well there in Maruti. Target prices are about 11,000. I think they're addressing the core concern of not having a pipeline or not having a visibility for the EV side. So I think this is what they have been sort of addressing. So I think both Tata Motors and Maruti are topics in this auto EM space.
Sure, Maruti and Tata Motors are the two best that you can consider within the auto space. But let's navigate our conversation now to IT stocks. We've seen a significant rebound, at least in the US tech stocks, which is with the AI is taking the world by the storm. But back home, if you see at something like a guidance which is coming from Infosys, which was a bit of shocker for the markets, how can one now look at the entire IT basket? I remember way before earnings, after one or two set of numbers, there was this argument whether IT stocks now make for a decent entry point, are they attractive at this level? And bang, after the Infosys earnings guiding cut, you saw the narrative being completely changed. Which side of the camp do you belong?
So I think we need to understand that the overall macroeconomic scenario in US is still sort of dicey. We have Fed meeting lined up this week. Probably beyond, if Fed gives comfort that beyond this 25 bips hike, we may not see further more hikes. I think that could be a macro positive for IT. I think when we look at for most of the tier one names, I think the deal wins have been good. It is just that these deal wins are not getting converted into revenues, and or there is an expectation that these deal wins will get converted into revenues in the second half or probably later. And which is why there's been an overall guidance cut for most of the companies. But when you sort of look at tier two names, I think there we are not seeing that kind of a significant pain. So from that perspective, I think it is more, our sense is that it is more to do with the macroeconomic uncertainty prevailing in the US, whether you'll have a soft landing or a hard landing, or you'll have a recession or not. So I think these are some of the challenges one does not really know at this point in time. But our sense is that IT hasn't seen much of a price performance. Valuations are at historic lows or closer to their 10-year averages. So it's a matter of time when this macroeconomic uncertainty sort of gets cleared. So I think it's a more of a waiting game, but we are structurally positive on IT as an overall name. And I think most of the players are also sort of looking to sort of ride the AI wave by doing investments. So from that perspective, if someone can wait it out, I think IT is a good contra bet yet even at current levels.
All right, a good contra bet at current levels. But let's talk about chemical companies. They've warned of tough quarters ahead. A bit of double whammy coming in for this one. A is the weak demand. B is the dumping by China. Valuations aren't looking that reasonable at this point of time. How are you viewing the space? What do you like within the space?
So I think largely what we are liking is more of fluorine chemistry players, so the likes of SRF. I think what is coming out clearly, like you said, is the dumping from the China. That is sort of having an impact, and because of that, the inventory at the overall distributor level is still high. Probably that will take 1 or 2 quarters to sort of get that cleared out. I think what we liked is that on quarter-on-quarter basis, we haven't seen much of a sort of a decline in the gross margin. So our sense is that worst is largely there in terms of numbers, or probably one more quarter. And pricing, we have already seen sort of correcting. So probably Q3, Q4 onward, things should start looking better for most of these companies. But largely, we have been preferring more of fluorine-based players. I think the demand in the end user segment for fluorine ingrained products is structurally looking better. So, which is why we like the entire fluorine-based companies.
All right, that's the word coming in. But we have also something in the like of Shree Cement, which will be reporting in the numbers, on Axis for that matter. How are you viewing the entire banking space right now? Are you more in the favor of PSU banks? Punjab National Bank, for instance, also will be reporting in the numbers apart from Axis Bank and Bajaj Finance. How are you looking at the entire financial space, and do you think PSU banks right now are better off as compared to private sector?
Well, yes. So PSU banks are definitely looking relatively better compared to private counterparts, largely because when you see some of the numbers which have come out on a quarterly basis, some of the banks have witnessed ROAs in excess of 1%. And I think PSU banks relatively will get a higher benefit of MCLR because their overall proportion to the book is in excess of 50%. So obviously, PSU banks will witness slightly better NIMs going forward. And I think if they are able to sort of improve the ROAs, I think re-rating possibilities are bigger in for PSU banks. But here, what we like is more of tier one names like, say, for example, SBI. Recently, we have sort of recommended even Indian Bank. So these are the top picks in the overall BFSI as a space.
All right, Pankaj, we'll leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you so much.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.